If you are receiving Social Security, planning to claim benefits soon, or helping a parent or spouse manage retirement income, there are 5 mistakes you need to know about before 2027. And here's the part that makes this especially important. These mistakes don't always look like mistakes when you're making them. Sometimes it is simply claiming at the wrong time. Sometimes it's failing to check your earnings record. Sometimes it's earning additional income without understanding how it can affect your situation. And sometimes the mistake is doing nothing because you assume Social Security will automatically take care of everything for you. But retirement money is different from a regular paycheck. If you lose a little money every month, that loss can continue month after month, year after year. Over long retirement, even a seemingly small difference can add up to thousands of dollars. So today we're going through 5 Social Security mistakes that seniors should review before 2027, what you should look for, and what steps you can take now to protect your retirement income. And make sure you stay until mistake number 5, because it is one of the easiest things to overlook, and it can affect your family as well as your own benefits. Mistake number 1, claiming Social Security without understanding the effect of your claiming age. One of the biggest decisions you can make with Social Security is when you start receiving your retirement benefits. For many Americans, the earliest age for retirement benefits is 62, but claiming early generally means receiving a permanently reduced monthly benefit compared with waiting until your full retirement age. On the other hand, delaying benefits after full retirement age can increase your retirement benefit until age 70, subject to the rules that apply to your situation. This doesn't mean everyone should wait until 70. That's not the right answer for everyone. Your health, life expectancy, financial needs, spouse's situation, other retirement income, and personal goals all matter. The mistake is claiming at 62 simply because you can, without first understanding what that decision could mean for the next 20 or 30 years. Imagine 2 retirees who have similar work histories, but make different claiming decisions. One starts early because they want the money immediately. Another waits because they have enough savings to cover their expenses for several more years. Their monthly benefits can be substantially different. And once you've made a claiming decision, you can't simply assume you can change everything whenever you want. That's why, if you're approaching retirement, don't make Social Security a last-minute decision. Before 2027, review your estimated benefits at different claiming ages through your official Social Security information and compare those numbers with your actual retirement budget. The goal isn't to choose the biggest number on paper. The goal is to choose the strategy that fits your complete financial situation. Mistake number 2, never checking your Social Security earnings record. This is one of the simplest things to review, yet many people don't do it until they are preparing to retire. Your Social Security retirement benefit is based in part on your earnings history. If the earnings record contains incorrect information, missing earnings, or another error, it can potentially affect your benefit calculation. Think about how many jobs you may have had during your working life. Maybe you changed employers several times. Maybe you worked for a small business. Maybe you had periods of self-employment. Maybe an employer reported information incorrectly. If you simply assume that every number in your record is perfect, you could miss an opportunity to correct an error. That's why one of the smartest retirement checkups you can do before 2027 is to review your Social Security earnings record through your official account. Go year by year and look for anything that doesn't make sense. If you find a discrepancy, don't ignore it. Gather whatever documentation you have and contact Social Security to ask about the correction process. Keep records of your communications and documents. The important thing here is that you shouldn't wait until you're already depending on your benefit to discover that something in your earnings history may be wrong. A few minutes of checking today could help you identify a problem before it becomes much harder to resolve. Mistake number 3, continuing to work while receiving Social Security without understanding the earnings rules that may apply before full retirement age. This is an area that causes a lot of confusion. Some people believe that once they start Social Security, they can earn as much as they want without any impact whatsoever. Others hear the opposite and assume they should never work while receiving benefits. Neither extreme is necessarily correct. If you claim Social Security before reaching full retirement age and continue working, an earnings test can apply. If your earnings are above the applicable annual limit, Social Security may withhold some benefits. The rules are different once you reach full retirement age, and the calculation also changes during the year you reach full retirement age. There's another important point that many people miss. Benefits withheld because of the earnings test aren't necessarily the same thing as permanently losing that money. Social Security can adjust your benefit later to account for certain months when benefits were withheld. But you need to understand the rules rather than making decisions based on rumors or something a friend told you. Before 2027, if you're working and receiving Social Security, check the current earnings test rules that apply to your age and situation. Don't assume that your part-time job, consulting income, or self-employment income is treated exactly the way you expect. And if you're making a major decision about working more hours or claiming benefits earlier, consider running the numbers first. Sometimes working longer can strengthen your overall retirement position. Sometimes the timing needs to be planned carefully. Mistake number 4, forgetting that Social Security can be taxable depending on your total income. This is one of those retirement surprises that can catch people completely off guard. Many seniors hear the phrase Social Security benefits and assume that the entire benefit is automatically tax-free. But depending on your combined income and filing situation, a portion of your Social Security benefits may be included in your federal taxable income. This doesn't mean everyone pays tax on their Social Security, and it doesn't mean the government simply takes a large percentage of every check. It depends on your overall financial picture. Other income can include wages, pensions, interest, dividends, capital gains, and certain retirement account withdrawals. This is why looking at your Social Security check by itself isn't enough. You need to look at your total retirement income. For example, if you suddenly take a large distribution from a traditional IRA or 401k, that additional income could potentially affect the tax treatment of your Social Security benefits. That's why before making a large withdrawal, selling investments, or changing your retirement income strategy, it can be useful to estimate the tax consequences first. The mistake is not necessarily having taxable Social Security. The mistake is being surprised by it because you never looked at the numbers. A simple tax projection before the end of 2026 could give you a much clearer picture of what your 2027 retirement income might actually look like after taxes. And this brings us to mistake number 5, assuming Social Security is the only retirement number you need to watch. Your Social Security benefit is important, but it doesn't exist in isolation. Your retirement income may also include a pension, IRA withdrawals, 401k distributions, investment income, interest, dividends, part-time work, or income from a spouse. All of these pieces can interact with your taxes and your overall financial plan. And for some seniors, income can also affect eligibility for certain income-tested programs or the amount they pay for certain benefits. That's why looking only at your Social Security statement can give you an incomplete picture. Before 2027, create a simple retirement income map. Write down your expected Social Security income, pension income, retirement account withdrawals, investment income, and other regular income. Then list your major expenses, including housing, food, utilities, insurance, healthcare, transportation, and taxes. Once you see everything on one page, you can start identifying potential problems before they become emergencies. Maybe your withdrawals are larger than necessary. Maybe you're paying for expenses you forgot about. Maybe you're relying too heavily on one income source. Or maybe you're actually in a stronger position than you thought. The goal is not to make you nervous. The goal is to replace uncertainty with information. Now, there's another important point I want every senior watching this to understand. Don't make financial decisions because a headline tells you that you're about to lose everything. Social Security content online can sometimes use dramatic language like, your check is disappearing, everyone is losing benefits, or the government changed everything overnight. Real Social Security rules are more complicated than a thumbnail. Your situation depends on factors such as your age, earnings history, marital status, work status, claiming history, and other income. So use videos like this to identify questions you should investigate, not as a substitute for checking your own official records. Before 2027, there are 5 practical things you can do. First, review your Social Security earnings record. Second, look at your estimated benefit at different claiming ages if you haven't claimed yet. Third, if you're working while receiving benefits, check the current earnings test rules that apply to you. Fourth, review how your other income could affect your federal taxes. And fifth, look at Social Security as one part of your entire retirement income plan instead of treating it as the whole plan. And please don't forget married couples. Social Security decisions can affect spouses differently, and a decision that makes sense for one person may not make sense for the other. If you're married, widowed, or divorced, make sure you understand what benefits may be available based on your particular circumstances before making a major claiming decision. The rules surrounding spousal and survivor benefits can be complicated. So this is another situation where checking official Social Security information or speaking with a qualified professional may be worthwhile. The same goes for people who are still working in their 60s. Don't assume that working automatically means you should delay Social Security, and don't assume that working automatically means you should claim immediately. Compare the numbers. Consider your health, your household income, your savings, your tax situation, and how long you expect to rely on Social Security. Retirement planning isn't about finding one universal answer. It's about finding the answer that makes sense for your situation. Finally, remember that your Social Security benefit could potentially be one of the most important sources of lifetime income you have. That makes it worth treating the decision seriously. You spent decades working and paying into the system. You deserve to understand how your benefit works and what choices are available to you. Don't wait until January 2027 to start asking these questions. Use the remaining time in 2026 to review your records, understand your options, and correct problems while you still have time to act. This video is for general educational purposes and isn't individualized financial, tax, or legal advice. Social Security rules and individual circumstances vary, so always verify important details through official Social Security resources and consider professional advice when making major retirement decisions. If you found this helpful, subscribe to the channel and share this video with a senior, parent, spouse, or friend who is relying on Social Security.